what can we see that isn't hindsight's 2020? It's pretty easy to say these are swing lows that the market now is showing that it's found some support when it gets into this area. It's been able to set it as the bottom of what we call a congestion box, a bottom of a range, whatever word you want to use. Would it be nice to be short anticipating a breakout through this yellow band to the downside? Would it be nice to be short higher? Of course it would be. But if you're looking for a breakout momentum trade, what you need pretty soon after you get short in this case is momentum. You don't want to put on a momentum trade and not get momentum and then just hang in the trade, think life is good. So if you just arbitrarily put on shorts for no reason, well, your timing is going to be bad, your locations are going to be bad, and so on. Where in here could give you kind of an indication that indeed the probabilities of a downside breakout are about to happen, and you're going to leave this congestion box as price went from finding balance, which is what price does. If it's got balance, it ain't moving, to finding an imbalance of potentially too many longs versus shorts. In order to move down, you need more sellers than buyers, right? In order to get more sellers than buyers, you need more longs than shorts. More longs than shorts create more sellers than buyers. We just said you need more sellers than buyers for the price of anything to go down. So if you were to say, where in there can we have a probability to break out to the downside if you were playing a breakout? And so we get our triangles, which is showing an imbalance of buyers and sellers. Now remember, that's what you need to go up or down, correct? If you have a balance of buyers and sellers, you go sideways. If you could get an imbalance of longs and shorts, that's a start. More longs, more sellers. More longs, more sellers. Well, we have that, and we get that with our laser. That's this green or red line, aka the laser. If it's green, there's more longs than shorts down here over the last 2 minutes. 87 contracts we've deemed to be long, 34 we've deemed to be short. 87 is bigger than 34, you get a green line. Don't worry about the gray line right now. Just, again, you're trying to find better aim and fire in your ready, aim, fire progression. Everybody else wants to just work on ready when they get into trading. Ready and ready, aim, fire, the definition of the metaphor is your opinion, up or down. You think it's going up? You think it's going down? Everybody just works on how can I predict where price is going better. And while that's important a little bit, it's not as important as everybody thinks. So they spend all their time just worried about how do I create the best opinion? How do I know? How did I know that? And they fail to focus on aim or fire. They don't even know it exists. Oh, that's a gun? I'll be good at shooting deer. It's not that easy. Yes, it's important to have a gun, but aiming and firing is sometimes more important. So, what is aiming and firing in trading? All right. We created our downside opinion. We've got the gun. We think below that congestion box where I just threw those yellow bands up was the bottom of the range. And it was. And it came in around 7 even. This is what the chart looks like when you put it under a microscope. Forget about all the numbers in the footprint. They don't matter as much as a lot of people try to analyze. But what does matter is when you have markers that paint on the chart when there's more buyers than sellers, the blue triangles, more sellers than buyers, the pink triangle. Doesn't mean every time you see a pink triangle, just get short. Remember, you have to have the gun, you have to be ready, and you have to aim before you could shoot also. But if you're looking to get your ass pushed into a trade, instead of just being random and arbitrary, which therefore your results are going to be random and arbitrary, you need to find tools that answer the questions of why price moves in the first place. Damn it, to go down, you need more sellers than buyers. Nobody disputes that. How do you get there, though? How do you get more sellers than buyers? Again, one way is to get more people long than short. So after you're long, you're a seller. There's a lot of longs, there's a lot of sellers. But just having a lot of sellers doesn't mean anything if there's also a lot of buyers, right? That's why the triangles are showing you moments of an imbalance within the market and a big enough delta that paints it. So anything above plus or minus 300, there's more than 300 sellers than buyers, pink triangle. More than 300 of buyers to sellers, blue triangle. Do you see when you get the pink one, it reacted pretty quickly? Is that your fire and ready aim fire? It certainly could be. You already went green on the laser, which is indicating more longs than shorts. That's what you want. And now you literally see this moment where you're getting an imbalance of sellers over buyers, which, oh, by the way, you need for the price of anything to go down. And also, these are not sellers who sold it. These are sellers who want to sell it. It's always the people who want to do it that influence the price movement of that product. It's the people who want to do it, not the people who did it. How many times I go over the real estate example? It's not three people who bought the house because three of them can't buy the house. But because there was three of them and they all wanted to do what? Buy it. That influenced the price of the house, didn't it? So what people want to do, sometimes more important than what they actually do. So this pink triangle is what people want to do. And the fact that you could compare it to something else. In order to find value, you've got to do what? You got to compare it to something else most of the time. In order to know that this plane ticket is expensive, how do I know that? Because compared to four other airlines, it's $200 more. No, it's expensive. You wouldn't have really known that unless you could compare it to something else. So when we look at sellers, we don't just look at how many sellers, we look at how many sellers versus how many buyers. That's the fight. It's your run defense against my running backs. You got to know the players, the fighters, each side of the verses. Longs and shorts are on opposite sides. Buyers and sellers are on opposite sides. NASDAQ and the ES as indexes are on opposite sides when you're trying to compare and contrast. Equity markets and treasuries are on opposite sides sometimes, right? Currencies is the easiest. Dollar versus all the basket of major currencies. Everything pegged to the dollar. You're comparing something to something else in order to find value. So when we play this back, if you're already looking to get short, you get shorts that come in, you're not ready, you're not ready. Where's the play button? And then you get longs that come in, but a reaction right there. You get longs that came in, boom, and a reaction to the pink triangle. Let me pause it. You don't only get the pink triangle, you're studying and watching the reaction of price to the pink triangle. 99.9% of all our competition don't even follow the pink triangle. And they could bullshit you and tell you, well, I got this, my platform. If I do this and I do that, I can get to the same result. No, you can't. Can't. Because this takes into consideration where price is right now, when it's leaving offers, how many prices above the last traded price. And it's almost like Dave's been able to build it so it's like watching the train leave the train station, how many people are left on the platform. And they almost got on the train. That's different than just adding up all the offers and adding up all the buyers and finding the delta. This is constantly reading those changes in orders coming in and being pulled out. All right. So you see a pink triangle. Does that mean sell it? Well, listen to the story. The idea was a potential breakout through the bottom of a box that's been defined for the last 45 minutes. This isn't just, I'm going to sit you down, sell every pink triangle. If you want to practice, do that. But this is part of a bigger story. The reaction to this pink was pretty, you started to see it come off it pretty quickly. So price was scared with this imbalance. Now let's back it up and see what it did when the blue triangle came in. And anybody saying that, well, the blue triangle should have made price go up. Well, it did, number one. And number two, when it doesn't go up and it starts moving through the area where we did identify buy imbalances, that's important too. That's important too. So you're reading price, you're reading the market with an understanding of what price should do versus what it's actually doing. Boom, we get a blue triangle, it kicks it up. Got it? And doing what it's supposed to be doing. Fine. We're looking at the red and green dotted lines as potential resistance above, a place maybe to get out if we're wrong with a potential short trade. Remember, the idea is trying to play for a downside breakout. We'd like to see more sellers than buyers who want to do it, because after all, that's what we're going to need. Oh, we're getting shorts in here. I don't want to get short. Too much competition, right? I want that laser to flip. It flips green back to red. Ooh, seems like we've got some shorts in here competing with this potential idea. Now you get the imbalance, and at the same time, you get longs that jump in. It was almost a 1-2 punch. Sell imbalance, longs come in. It doesn't have to work this perfectly or have the same sequence of events, but the sequence, the concepts get laid out the same. Does that make sense? The concepts get laid out the same. And so you're starting to strip out randomness, put yourself in a position to find better locations to put your position on. So it's not the position you're putting on, it's where the hell are you putting the position on? Because you could be short from down here, and in 20 minutes it's way lower, but you got stuck in the hole, you get shook out, maybe if it rallied back to here. So you were short, but you lost money. It's like, how could you lose money 20 minutes from now? It's 20 points lower potentially. How would you have lost money being short over the last 15 minutes when we're down 20 handles? Your location was bad. So start putting yourself in a position to ask the right question with respect to not where price is going, but why. And once you know why price moves, you start finding tools that give you a probability to get you what you're looking for. You're looking for the imbalances of buyers and sellers. What's going to get you there?